Nirmal Bang, ladies and gentlemen. I'm Hiral Dadia. We have with us Mr. Yashovardhan Saboo, Managing Director, along with Mr. Ritesh Kumar Agrawal, Chief Financial Officer at Ethos Limited, joining in. Welcome to the show, gentlemen. And firstly, congratulations to achieve this milestone. Just for everyone's knowledge, if people are not aware about Ethos, all your luxury watches that you wear, they all come from the house of Ethos. So I think that is something which will actually tell you what Ethos is all about. My first question, gentlemen, coming to you is firstly, if you could give all the viewers a few details with regards to where the IPO goes.
Okay. Would you like to?
Yeah. So our IPO is basically for 475 crores. So overall, that limits out of that 375 is for fresh issue and 11,08,000 share is offer for sale. The price band that we have fixed is from 836 to 878, and basically the offer is for the growth capital of the organization, which will have our issue proceed to be utilized for working capital, opening of stores, as well as upgradation of the technology. So this is what we have for the IPO.
Right. So if you could just give us a breakup in terms of utilization when you say opening up of new stores, that's expansion there, technological development. How is that breakup going to look like?
Sure. So opening of stores. So we have planned for 13 stores, new stores, as well as 6 for refurbishment of existing stores. So total amount that we have asked for 33 crores. Technology enhancement is 2 crores, and 235 crore is for working capital, and the balance is for general corporate purpose.
Right. And overall, if you see in terms of the business as well, for the benefit of our viewers, if you could just highlight a few details with regards to what Ethos does, what is the business model looking like?
Sure.
You will have to, Ritesh, can you mute yours because it's bouncing here. I'm just going to take you a bit through what Ethos does and how we make money. Ethos runs a chain of luxury and premium watch retail stores supported by a very, very strong digital internet and internet-led or internet-assisted platform. So it's a true omni-channel platform. Very strong base digitally. A website that attracted more than 21 million sessions in the last 9 months, or in the last calendar year, sorry. A very strong social media following, supported, of course, by this chain of 50 stores spread across 17 cities. We represent about, or we retail about 50 brands, the largest in the country in terms of number of brands, in terms of number of sales. And what we offer to the Indian customer is something very, very comparable in terms of buying premium and luxury watches, comparable to everywhere in the world. Whether it's in terms of prices, our prices are comparable with global prices after paying all the duties and taxes in India. We are, in terms of the offering, both in terms of choice of brands, as well as depth and width of the brands and products within each brand, very comparable. And above all, digital and in-shop, in-store experience, I would say comparable to Singapore, Dubai, London, or wherever else Indian customers like to shop. And for this reason, we find more and more customers now coming and preferring to buy in India than shopping abroad. And that, I think, is one of the big reasons why Ethos has been successful and continues to be successful.
Right. So with all of this said and done, currently, if you see in terms of the top brands, which are the top brands that we actually have partnered with?
So, we have 50 brands. So that's a long list to go through.
I'm sure.
But the best is if you actually visit the Ethos website, that has all the brands. The RHP lists some of them, not all of them. So, for example, Omega, IWC, Schaffhausen, Panerai, Jaeger-LeCoultre, and a host of other brands. in the luxury space as well as in the premium space. But typically, yeah, I would say if you take, the leading brands in the world, chances are that they are with us.
Right. And do we have a breakup? I mean, this is a very IT related question, but usually when we talk to technology companies as well, we talk about the top 5, 10 clients which contribute to maximum revenue to their business. Similarly, any top, 5 to 10 brands, or if not the brands, but what's the revenue contribution that comes from the top 5 to 10 brands to the company?
We've got a number there. I think the top 18 brands constitute about 80% of our business.
Right. And overall, if you see in terms of the business strategy as well, what is it that works right now? Because clearly, as you said as well, omni-channel presence is what you already have. If you have to divide it between physical stores versus, say, the online aspect of it, how does that revenue breakup actually look like?
That's a very, very interesting question, but almost impossible to answer, because very long ago we abandoned the idea of looking at the physical section and the digital section separately. It has become seamless. Why? There's a customer who discovers or does his product discovery on the net using the phone or using the laptop. The next day, she is walking around in the mall and she spots Ethos and she goes in. What is it? And then she chooses a watch over there, but she doesn't buy it because she needs more time to think about it. And the next time, maybe a week later, she has time again and she decides, okay, I think I'm going to go for that watch. And she calls our call center and says, look, I want to finalize that watch. What do I need to do? So the guy says, look, ma'am, you can visit the store or we can have it delivered to your house. Now, what is that? That's a very, very typical kind of an experience. Is that physical? It is both. And this is actually the foundation of what we are doing and what is leading to our success. Because we find more and more people start their journey in the luxury business or discovering watches on the net, but they do want to touch and feel. They want to experience the store. They want to experience the brand. They want to talk to our salespeople who are very technically qualified, and they can talk about the brand, about the product. That's very, very important. So yeah, it's really a combination, the seamless combination actually led to our great success.
Absolutely. I think it's more like you can call it calling it as well. So clearly, that's what I think the world is moving to as well, not only in terms of the consumer side of it is concerned, but from technology to education to majority of the sectors, wherever it's possible, digital is the new, probably lingo that everyone is looking at. With all of this, if you see in terms of the different segments as well, would we say that the segments are broken between, say, luxury to super luxury to something which is really, basic?
Yes, of course. So, there is a report of Technopack, which actually breaks it up quite well. The overall market size currently is about 13,000 crores, of which about half is in what we call the mass or the fashion segment. And we're not really involved with that. The top half itself consists of 4 segments, which is premium, bridge to luxury, luxury, and high luxury. So high luxury, for instance, starts at the price point of 10 lakhs and above. And these are the 4 segments in which we are active. What is interesting is that actually the higher price segments, luxury and high luxury, are growing the fastest of all. And premium and bridge to luxury are growing faster than the fashion and mass segment. This is not only true in India, this is also true globally. Why is this happening? One of the reasons, of course, is that at the price point of fashion, a lot of the market is taken by, by smartwatches or wellness devices. But the other very interesting reason is that younger people are now turning towards luxury watches. Something that we hadn't really thought of or imagined 10 years ago. But the younger people, achievers who've achieved a certain level of wealth or income, they not only buy the smartwatch, but they move on to luxury watches because they're looking for some permanence. There is this consciousness that I can't be buying and throwing away things all the time. I need to, and for men especially, but also for ladies, what is the one product that you can buy, use and enjoy for 10, 20, 30 years, and still it will be of value and you pass it on to the next generation? I challenge you to think of too many products other than watches.
Right. So if we have to say in terms of where the growth strategy from here goes, do you think luxury segment is where the growth is going to come from?
Well, it is, in a country like India, even bridge to luxury and premium is important because there are there are millions of young Indians that we are adding to the upper middle class, and this is the aspiring section of our society, and it's very, very exciting because they first of all are very confident about themselves, right? So they know that they don't have to save every paisa, they can spend, and they do that, and they are very informed. So it's not that they just buy anything. They want to know about what they're buying, what's the price they're buying at, and so on. And we love to engage with this. So I think the growth is coming from all segments. I do want to mention over here that one of our most exciting segments that we see is actually the segment of pre-owned watches.
Okay.
That's a new segment globally. Globally, it is already about 25% of the size of the market of new watches in the premium and luxury segment. And it is estimated to become 50% of the size of the new watch market over the next 3-4 years. This is a Euromonitor and a McKinsey report. It's available in the public domain. In India, Technopack has estimated the market to be about 40 to 50 crores 1 or 2 years ago, and estimated to go to 700 to 900 crores in the next 3 or 4 years. So, and we can feel that growth. We started this business 2 years ago, and we are seeing that kind of growth happening. So pre-owned watches is something that is extremely exciting. Why? For 2 reasons. Number one, aspiring customers who want to get their first luxury watch, but want a good price, an entry-level price into a luxury segment. They can buy a pre-owned watch which has been certified and fully refurbished at Ethos, right? At a much more attractive price than it would get the new watch. Secondly, it allows people who've got multiple watches and they're not wearing 1 or 2 or 3 watches and they want to trade it or they want to upgrade it to another watch. It allows them to trade the watches, and watches therefore becomes actually an investment class. You buy watches, but it holds value for the future as well. So this is an extremely exciting, and we expect a lot of our growth to be coming from this segment as well.
Right. And overall, if you see in terms of growth as well, the CAGR growth that we've seen as well, the revenue, the top line growth is still in single digits. However, in terms of profitability, yes, we've seen double-digit growth coming. Is that the momentum we're looking to maintain?
Yes, first simple answer, yes. But let me also tell you this, that the last 2 years have been COVID impacted. But I want to go a little bit beyond that, because even in the last 2 years, and this information is in the public domain, if you do a quarter by quarter analysis, right? And if you filter away the quarters that have been significantly impacted by COVID, first 2 quarters of FY21, first quarter of FY22, filter away these, and then you see the quarterly trend, you will see this strong undercurrent of growth. So it's not just, that overall the growth is single digit. There is this undercurrent for the last 10 quarters, I would say, which shows the steady growth, masked in some quarters due to COVID. Now that COVID is subsiding, we are seeing this growth. We are seeing this growth with its full power, and with this growth is coming the profitability. Because when the turnover is growing, then we get the operating leverage to we can leverage on the fixed costs, and that's the main reason why our profitability is emerging and growing fast.
Right. And overall, another thing is that we're using the funds to repay debt as well. So what's the amount we're repaying, and by how much will our debt to equity improve?
Ritesh, I'll let you answer.
So our current debt in our books as at 11th April is 62 crores. Prepay is 33 crore, 33 crore from. And so current debt equity ratio is at 0.6%. And it will further improve by, so we will have only 30 crore with 190 crore. So it will.
Okay. And overall, if you see in terms of market share as well, where does that stand for us in the luxury and premium watch segment?
As So as Mr. Saboo has mentioned about the growth that we are looking into and that we here. So definitely we are looking forward for definitely a healthy growth.
Right. And if you have to look at the next 3 to 5 years, I know we can't give forward-looking statements at this stage, but if the next 3 to 5 years are concerned, what's that milestone we are looking at?
So
what you expected to grow at about 12.5%. And we've consistently beaten market growth. We're going to be milestone in flagship stores, a second launch for our pre-owned watches, maybe new brands which are not yet present in India. We will be adding some of those. And there will be, I think, some of these things fructify to a position where we can talk about it. We see very exciting milestones coming up in the years ahead.
Right. And my last question coming to you is in terms of that be for an ethos in India?
The space of premium and luxury watches,
correct,
the only pan-India chain. Typically, retailers who have won a couple of stores in limited or in a restricted geography. They have usually been there for much longer than we have been, but they have not really been able to grow beyond their geography. So this is competition. Again, on the online space, as you will see from numbers in the RHP, there is really not too much competition because social media and in terms of traffic on the website and so on, you can put all of the other competitors in India together and we're comparable with all of them together. So not too much competition in our space.
Right. And my last question coming is, as you mentioned about geographies, are you seeing maximum revenue contribution from any particular geography in terms of India?
Well, in the luxury and premium space, of course, Delhi and Mumbai, let's say Delhi NCR and Greater Mumbai, they pretty much account for 50% of the market. So obviously we see that like in all other premium and luxury products coming. However, what we do see is also a spreading of the geographical interest. We've already established a network, not only to third cities, but even in small stores we opened 2 years ago was in Guwahati, and that's a result, right? Because they buy premium watches, but there's a market for luxury watches there as well, right? Because there is wealth there. There is wealth in smaller cities. This wealth is now coming out. So while we do see a lot of growth in, let's say, North and West, Delhi and Mumbai, this is balancing out, and we see, and I believe that we will see greater growth in the other segments, second tier and third tier cities.
Absolutely, and I think it's the millennials who are picking up the trend as well of luxury watches. So that's something, and the demography is really supportive as well. I think because I think India is one of the countries which has the largest working group demography as well. So that's something which could be at the benefit of Ethos as well. But congratulations, a good space to be in, an exciting space to be in as well, which is an aspirational brand for everyone. So apparently Ethos becomes an aspiration for all as well from a company perspective. Congratulations once again. Good luck for the IPO and speak to you soon again. Stay safe.
Thank you.
Thank you.
Thank you so much.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.